Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for December 7th, 2022. We'll start with the sniper trade of the day. Here was yesterday's close in this symbol, which is CLF on 3 minutes. That's our steel company. Here was the gap down. This is the 3-minute bar. I'm sorry, here was the gap down. It sold off, closed to here. Second bar opens here, sold off, and then takes out the high of bar 1. So we buy it long on the OR3 entry technique. Put a standard risk box here. If it has to get above this previous peak of the RL10 to be interesting. And so that makes this space between our entry and the clear breakout. That's the tactical space. It's almost like the gray zone, if you would, that inside here, all I have to do in the tactical space is get my stop above my entry, so that I can lock in this wedge, which we call no lose plus dinner for two. And when I do that, my psychology changes because I'm not going to lose any core capital on that. Again, it has to get above this peak of the RL10 to be interesting. And up we go. Check or hold. That first bar, interestingly, did this. It took off from where we bought it, went straight up, closed here. The second bar went to here. So in a matter of 5 minutes, we're holding that much gain against that much risk, which is 2R. Why do we trade Cliff? Because Cliff does that. So there's, in 5 minutes, that's 2R in hand. So where could you put your stop? Well, you could lock in the no lose plus dinner for two. You could lock in all of the tactical space up to the peak of the RL10. You could take half of that bar and lock it in here and give it this much room to play with. Like you could take a full R and trail it with a 1R. But in any case, you're locking in at least 1R. So this would be a good problem to have. I hope you have that problem all the time. All right, so now we've got a little bit more after this. After it closes here, it makes a low, it makes a low. So if your stop is still somewhere around in here, and with the peak excursion of up in here, you've got about 1R. If you were trailing with half an R, you might have gotten out here and then locked in 2R. So explore. I don't mind like a 2-bar low. And that should get us out right here. You might have opted just for the PSAR or the bottom of the dragon, in which case you would still be in. That's why you should spend all your time working on the exits that you feel confident and satisfied executing. So if you got out here, then this price or that price should get you back in. Because notice what happens with the RL10. It never budged. This sell-off and reversal was so fast that the RL10 never moved. So let's explore the PSAR as a possible exit. The first time that you get a hint of weakness is in this little gyration because of that bar down. But that bar never even got out of the dragon, and it reversed higher and higher to here. So even if this gets you out, like somewhere in here, you have to get back in here, in which case you still have that favorable move. The first place that you really see a confirmed weakness is when the RL10 crosses the baby dragon. And then if you're trailing with an R, you're probably going to exit right here at the PSAR, where the PSAR gets you out. So if you've never heard me say this before, trust the PSAR. Pay attention to the shape of the RL10 and its relationship to the baby dragon. Wait to see it close and cross. And now here's an exit that has about 2.5 R. Let's map it out. How big was it? 1, 2, 2.5. Now, because that's a 2.5 R move, and it was the strongest sector and stock in my stack, I'm not interested in shorting it. I want to see what happens. Where is it going to find support? And is there another leg up? It doesn't break through the PSAR, and the RL10 collapses. So now it's starting to make this move. It had an opportunity to go. It did not. So when the dragon collapses, now notice that the dragon has rolled over. I'm now ready to take this short, whereas here, I'm not ready to take the short because the dragon is still rolling up, and I don't want to fight that. But by this time, the dragon has rolled over. You know, we're 6 or 7 bars into the PSAR flip. It did not make an RL10 new high in here, so short. Standard risk. I think it could come all the way back to here because that's where it was just 40 minutes ago. I take an immediate 1 R loss. So we were about plus 2.5 on this one. We're minus 1 on this one, so we're about plus 1.5 so far. Check or hold? Now notice that it rolls over again. Now I have a high, a lower high. The PSAR never flipped, even though I got out of there because I didn't want to lose money. I didn't want to be wrong. So the RL10 only got this high and then rolled over. And now it's a collapsing dragon once more. So now I'm short again. Learn my lesson. There's my standard risk box. Check or hold? Hey, was I right or was I wrong in taking that exit there? Wrong question. Doesn't matter. I saw the situation, I executed, and I live with the consequences. After the smoke clears at the end of the day and I have a large sample of trades to consider, I'll think about adjusting my... But I'm not worrying about that right now. It's just a decision. Does not matter. I'm just trading. All right, so now we are this far into the good. It has given me a 1, 2. My stop should be approximately here so that I can lock in this gain. No lose plus dinner for 2. And I'm giving it that much wiggle room to try to hurry up and roll over. It doesn't get interesting until it takes out that previous lower excursion. This is where it gets interesting. So I'm just in the tactical space here, seeing what price is going to do. I've already locked in my gain. Just relax. Fails in a big way. Oh, nice. Oh, it's coming back like we thought it could, all the way to where it started. Imagine that. Take a standard exit as it 1, 2, 3, and then is coming through the dragon and coming up to tease the PSAR. I just take it when it crosses the dragon so that I can get 1, 2, 2.5. So I had 2.5 on this one, 2.5 on this one, -1 on that one. So I'm at +4 so far. Now, was I right or wrong? It doesn't matter. Wrong question. I'm just trading. Let the smoke clear. Like, I don't have an emotional valence on this stuff. Like, I'm not renewing my sense of self and my identity with every single trade and every single decision. Those are like little drops of rain on the windshield. Does not matter. I use the windshield wiper, clear the window, keep driving. Worry about that stuff later. Not when the market's open. All right, so the next trade is a scratch. It had a nice move, took the standard exit. The R10 didn't go through the PSAR. It started rolling over, so as soon as it comes out of the dragon, I'm back into it. Like, I could wait for this to get short as a collapsing dragon, but I just take the kata 2 because it's already indicated it's going lower, and the last big move was down, so why not? So there it was. The R10 could not penetrate the dragon, crossed the baby dragon, leaves the dragon, bang, short, standard risk. It sells all the way to here, and then comes racing back here, so I take a little fractional win. Not much, but just get a little sliver back. Doesn't matter. Now, what would we call this entry? Kata 2. PSAR flip, a higher low, take, and off we go. A stop down here. You wouldn't be wrong to have your actual execution stop here at half of the MMRB, because as soon as it violates here, you want to be short. So you're really only risking half a box. By that time, with about 3 bars, and so my entry is here. The first bar closes here, second bar closes there, third bar closes there. Would you be wrong to move your stop to about here and just lock in that little piece? No, you wouldn't be wrong, because it's not a matter of right or wrong. It's just how soon can I get my risk out? That's all. Now, who in their right mind could judge you by saying, oh, you chose the wrong time to eliminate your personal risk? Are you kidding me? Do you hear how silly that sounds? Oh, I wouldn't have removed all risk from my life at that moment. I would have decided to stay in risk longer. Well, go ahead. That's your risk, not mine. So price is here. My risk is out. I don't know how far it's going to come back to this cluster. You know, it's come this far, so it's 1/3 of the way back up the stack. So I can enjoy this move knowing that if it just gets up here and starts failing, the worst thing that ever happens to me is I make money. I'll take that. Standard exit, anyone? PSAR? Lock in this much gain on that much risk. It's about an R, maybe a little less. Count it up later. Standard short, a COTA 2 short. Here was a high. Here's a lower high. Here's a PSAR flip. I have to be short down here if it gets below this line as a CD. So I let the RL10 is through the dragon. So just take that short with a standard risk box. Why not? Standard exit on the PSAR cross. One unit of risk, 2 units of reward. So this is about a +7 day by the time all the smoke clears. And by this time it's 3 p.m., so that's enough for today. For those of you keeping score at home, I didn't trade this one, but this is NRG. This was the #1 sniper Godzilla pattern yesterday. Had a 5 sigma move yesterday, and this is this 20 cents is the R10 MMRB is the size of this yellow box. So if you just looked at here's where it opened, sold off, came back up. If you take the first PSAR flip, you get an entry here. You're not going to lose money on that trade. If you just did the PSAR flip, you make that much. If you take the PSAR flip on the next one with your standard risk box, you get an exit somewhere down in here. You make 1, 2, 3, find the mover. Now, in the next little series of 4, in the middle of the day, all it does is just monkey around. You're not going to win or lose much in there if you take the PSAR. So this doesn't even matter. Well, if it doesn't matter, why would you take them? Because you don't know it won't matter. But it turns out that it just nets to nothing. Those aren't wrong decisions. Those are just trades. And then you just keep firing. Oh, and here's one at the end of the day that scores another 3. That's the sniper trading with the Godzilla pattern. Yesterday, day -1, it had a 5 sigma move, meaning it had a huge one-day intraday move, and this thing had a 3.5. This is a 3.5 sigma move here. This thing is still moving the day after it became the Godzilla. So it was in play yesterday. It was still in play today. I'm not allowed to be surprised if it was a mover today. This thing is still in play, NRG. So find the mover, either live while they're moving or the ones that are most prone. That's why you pay attention to the sniper patterns and especially the Godzilla. We'll see more of them today on some more weakness in the market. Here's a 30-minute on the S&P. Market 30, meaning 30-minute bars. Here's the 5-day, 10-day, 30-day is out there. Here's the 10-day low. This thing is hovering right on the 10-day low, and it's done nothing. Now, do you notice something on the 30-day or the 30-minute bars? That thing gives you some nice moves. You can trade the 30-minute bar intraday. It's a hybrid between swing and trade. It's a very slow day trade. It's a very fast swing trade. But that's what hybrid trading looks like. Today, however, in the market was really this, and it just was a range compression day at the end of an adverse move and is finding support right where it has found support before. What did it do the last 3 times it found support at this level? It went up, it went up, and it went up. What could it do tomorrow? It could do this, it could do that, and come back and visit this price level. So like if this little resistance right here, that's all gap right there. So if this resistance fails and it goes below 390, that's where the easier money probably is. But if it doesn't fail, you're not entitled to be surprised if it goes right back up to 404 or 410 tomorrow or halfway. Because it did that the last 3 times it was at this price level. It's not a prediction, it's a description. Here's what it looks like on daily bars, looking back 30 days. Daily, here's our 5, 10, 30-day look back. There's your 30-day low, 30-day high. This is kind of like a COTA 2 in the RL10. Now it's come down, tested the PSAR with price, but it hasn't flipped the PSAR yet, even though price has been through it a couple days. Why? Because it doesn't flip until the RL10 gets down here. So anytime that you act on price violating the PSAR, you just have to know that you're making a decision to front run prior to the formal signal happening. That's like just getting out of the way of a truck because you have reasons to believe that if it continues to fail, you're going to get crushed. So that's not wrong. It's just a decision to be more risk adverse. But if tomorrow, now notice that today is a doji. Opened here, closed here, had a small range day compared to the last 4-5 days. This was a tiny little consolidation day right at a support level. So this is a compound critical state ready to go large in either direction. Not a prediction, just a description. Large move available in either direction. Let's see how the traders traded today. Whoops. Now, here's what I want to say to Tim. Now, Treasuries is an enormous market, and a lot of times it just trades in an orderly fashion to the point where the R10 is 20 cents. But I want you to notice that the width of the box is about 30 cents. And on these little moves long, where you are exiting with a full 1R loss 3 times, there was no tactical signal anywhere in here that said that the price, like this starts going short here and you're exiting here at the VWAP for a minus 0.8, that's noise. This long signal here, which exits, it's still in the dragon. It hasn't even gotten to the PSAR yet. So this is a case where a 20-cent MMRB is too tight because you're not seeing a signal that tells you that the long is failing. Like if you want to go long here because it's north of all this and a new high of the day, it hasn't even left the dragon, hasn't even left the PSAR. So it may be that what you need is a 40-cent MMRB. Hey, if your R10 is 20 cents, what that means is that in a range stat move, which is the maximum reasonable move intraday, there's 10 of those boxes available. If 20 cents is too close and it doesn't give you a signal that tells you your hypothesis is wrong, in this case you got to use 40 cents to get to a place where you're at least reversing on a PSAR flip. That just means that you're using 40 cents for the MMRB. That means your position size is cut in half for the same amount of risk, but you still have a 4-to-1 reward to risk ratio intraday, which is plenty. So the R10 is not a requirement. It is the initial place to start estimating what your manageable risk box is. Now, you're not taking more than a 1R loss, but you did not get a signal to go short. You exited simply because you established 20 cents as your 1R loss. But that 1R loss was not geared towards a tactical symbol or a signal that told you the hypothesis was wrong. So, for instance, if we have a harsh sell-off and it ends in a doji, and we decide that we're going to use a manageable risk box around the doji, regardless of price, right? We're entitled to say that the first signal that doji has yielded to a directional move is if price comes out of this yellow zone right in here. As long as price is inside the limits of the doji, the hypothesis is that the doji is marking off the area of indecision between buyers and sellers. Until price breaks out of that range, we don't have any indication about who's going to be stronger, bulls or bears. But if the bulls are able to push price north, we now have, according to the theory of this trade, we have a signal that tells us that this may be happening. And if we think it can go back and test the previous resistance, we can say, oh, there's 1 unit of risk, 1, 2, 3. I now have a 3-to-1 reward to risk ratio. This trade is justified on the hypothesis of reward to risk using the doji as a marker for the hypothesis. So what's the R10 then? Well, the R10 is simply the first way that we start estimating the size of the manageable risk against a reasonable move. It doesn't mean that the R10 is a reason to get out. It simply means that that's the first place you start when you're estimating the size of your manageable risk box. I look and see, what is the price that gives me a signal that tells me this is not working? Like, you could very easily argue that the low of the day, which was right here, I want to go long, and the first price that tells me this hypothesis is not working is a violation of the previous low, which also lines up with the PSAR dot for that bar. So you're justified in calling that the size of your risk box. It's a 40-cent risk. And guess what? That entry, instead of being the first of 2 1R losses, would have had you in this trade to here, which is already plus 1.5. And then when it starts rolling over, you could say, you know what, I'm just going to take it here. And then instead of a 2R loss, you got 0.7 of a gain. Now, let's go a little bit further to the west. Now we're out of bullets over here. The same thing on this one. This is a reasonable short. Why? Because it's below the VWAP. It's had 6 bars to resume the upward signal that this spiky thing gave you, and it never did. And now it broke through the PSAR, and now you got a PSAR flip, and you're in the tactical space until it gets down to here, and then this is where it could really take off. So that's a very reasonable entry point. What's the first price that tells you that it's wrong? I wouldn't disagree with leaving the dragon on the far side. That 1R loss, to me, is justified. That signal is justified compared to what I think. I think all 3 of those are noise exits. So you end up getting out of here, but there was no clear indication of price action. This is all just inside the river. It's inside the dragon. So I don't mind this one, but I think all 3 of those are a misunderstanding of what the R10 represents, which is really just the initial planning template to determine if that gives you a reasonable move and a signal that the reasonable move is not happening in your favor. All right, Agnieszka, this is, let's see, what do we have here? British pound, Canadian dollar. So here is her PSAR flip. It has moved decisively out of there. She gets it long. She says, look, my risk box is going to be here, that a price below that support level would tell me that this move is not working. So she's got a logical risk box that's geared towards a signal that has information value. She gets it long. It moves to here. She exits when it penetrates the dragon and flips the PSAR, and she collects 0.8. Now, it gets this far down and then reverses and crosses the dragon. Now, she was off the screen, but guess what that entry could be called? Quiz. What would that entry be called? Kata 2. The emerging dragon would be if you go above the RL10, but Kata 2 is in the bend of this. See where that dragon, the hump of the dragon is here and the hump of the RL10 is here. If you buy that in here, it has just crossed the dragon, and there's like a little zone of uncertainty inside there. So if you buy it inside here, inside that little pocket, it's a Kata 2. Now, this would be an emerging dragon entry, but it's still off the Kata 2 pattern because you still have a higher low. So I wouldn't disagree with you on that one. And you're not going to lose money on that trade. And if you just waited for it to penetrate the dragon to get out, you still collect that. Here's your PSAR flip. You could get short here. You might have waited for this little R10 wiggle and gotten short there and moved to here, and you wouldn't lose money on that trade. You could get long right here because you still have a Kata 2 pattern in play. And then as long as you get it before it crosses the hump of the dragon, you're in the pocket. This would be an emerging dragon up in here. And to me, the Kata 2 in the lee of this little elbow, I see that like an elbow in the dragon's neck or whatever. A little. You're not going to lose money on that trade. She could be short here. She waits for the collapsing dragon. She cuts it at the right spot. This could be a stop and reverse, and then this would be a scratch instead of a minus 0.6. She stops and reverses here, gets paid. She takes the next Kata 2. Now, when you're that far in the money, don't let that go to negative, going from plus 0.7 to minus 0.3. At least scratch it. But then she keeps firing and gets 1.5, and that's 1.7 for the day. So there was plenty of room for improvement in here. But even as traded, it's a nice day at work. Tesla. Plus 1.2. So here's the OR3. Might have gotten long here. May have then just scratched it. But this is a good short. Second position and then gets out. Re-enters, scratch, long. Now this one should at least be getting paid a little bit. That short pays and that one scratches, so 1.2. Not bad. Apple. Basically scratch for the day. Too slow to cut. So OR3 decides to get long when it gets above the dragon. That's as long as you can possibly stay. That you decided to take the full 1 hour loss. So I'd like to, when that doesn't follow through right away, I'd just get out. But that's a great reversal that gets paid. I'd have been on this one, I think, and probably scratched or taken a fractional loss. I like the short. So that was your short to here. And then that's a Kata 2 short. When that doesn't work right away and starts, like it didn't even get through the PSAR and now it's starting to get back through the dragon, cut it there, or cut it when it crosses the VWAP. This is late on the exit, which makes it late on the entry. So now if I'm entering around here, this is now a scratch instead of a loss. This is a great short. That's a good effort on the long side that you cut quickly. So some learning points inside there on Apple. Facebook, it, not even not even tradable. I mean, what in the world is this? Yeah, the dragon is a noise box. What is this? I'm not sure why we're short here. If that's the OR3, we're entering inside that first one. We should be entering long here or short there, not short, and then, I don't know. So entered here, exit for +1, quick scratch. Put some boxes around here so I can see what's going on. This one, as soon as this doesn't work, don't wait for it to confirm a full loss. Yeah, you've learned that lesson. I don't find Facebook very tradable. I hate those guys anyway. Anyway, Coinbase. This is Satya for +3.5. Look how nice and orderly this is. PSAR flip, gets it as it crosses the dragon. Orderly in, orderly exit. He's not waiting for this. He gets paid. Now he gets short on the curl through the dragon. Gets paid. Could have gone long here, would not have lost money. But we got lower highs. He's right inside the curl of the dragon on the PSAR flip. Gets paid. 3.7. Right by the numbers. Very orderly move. So Eugene framed this one in Alta yesterday, and now is turbo trading it on the 5 minutes, is going to pull 6R out of this thing, and that's not even taking any of this. How orderly is this thing? And that's not even taking this PSAR flip. It's waiting for this thing to move out smartly. This looks like the gap opening, and then he's here. Moves the risk box off. There's his price ladder for the PSAR, or for the range stat. 2R battle drill. 2R battle drill exits here for 6R. Go into the chat room and download that one and study it. Well done. Wheaton Precious Metals. Here was yesterday's closing super pinch. That's the noise level. That's the first start of a directional move. There's his OR3 entry for 2R. Right by the numbers. Notice how this, a nice initial surge and then just slowly petering out. That's reflected in the rolling over of the MACD. All right, Tim, this is, Treasury. That's the same one we just saw. Sorry. Salesforce. OR3. I'd have been tempted to go long here, and I should be exiting there if I do. Let's see, where's our first trade? If you take the OR3 and you get long here and you take a half an hour loss there, we should be short that thing right about here or not later than here. And so getting short here is after about a 2 or 3R move, and then the reversal right back to the dragon gives you the money. After a 3R favorable, end up taking 1R short. I like the reversal and getting it here. But again, if this doesn't work right away, get out at the dragon. This is supposed to fail right now. It doesn't. It opens here, makes a higher low, and is moving against it. Get out right there. And then get long here and scratch. It crossed the VWAP and it didn't work, so you just scratch it. No harm, no foul. I like this short, and again, you got to scratch that one there. 1, 2, 3 exit, and it did not fail. Now I've got higher lows. I can take this as an entry. I won't lose money on it. crosses the VWAP, just keep firing. Now I get paid. So steady. CVX. OR3, if we take that long, we probably should end up scratching that. I like this long. I say, look, if it doesn't work right away, get out. Don't take a full R loss. I like the reentry. Oh, this was short. I like the short. It doesn't work. Get out at the VWAP. I like this long. You wanted to get paid somehow. Psychology. And then that caused this. And then we missed this. So just relax. What you're trading for right now is familiarity and repetitions on the rules. And it feels like you've got an emotional connection to these things, still wanting to be right. And look, in my identity of who I am as a person, trading is about that much right there. It is a task, it is a craft to earn money, to pay bills. It is not my identity and connected to my soul and all that. It's simply a job that I do. And who I am with my values consist of all those other parts of my life. And I'm trying to trade professionally, but that's all it is. Disney. So we've got some span of control issues in here, I think. I would scale back. OR3, I like the short. This thing got that far, and the reverse. At least we got paid. We could be long here. I'd have taken a loss. If I noticed the higher lows, I might have gotten in. But Disney's not one of my standard traders. It's all over the map. That's just a hard one. That was a hard one to trade today. And just notice the same set of rules applied to yesterday, and now we'd all look like geniuses. But that's what trading is like. Let's see. Agnieszka. Is this the same one that we saw? Yeah, we already got that one. All right, that's the trades for the day. Let's look at the reports, find some movers here. So where are we in this market? We are back into bearish territory, bearish quiet. It's rare for it to stay in that condition. Bearish quiet actually offers an opportunity to stabilize in a doji like it was today and rebound because we didn't see panic selling. So that's a very rare condition, and it gets my attention. We're still in risk on according to Risk Z, so there's still potential for nice upside moves from this support level. The winning symbols, and ones that aren't losing a lot, Procter, Merck, Johnson & Johnson, Coke. Nobody's trading those. Don't know why. What's maximum losers? Tesla, ExxonMobil, Alcoa. Like Disney has been a max pain, so I should not be trying that thing long unless it's a runaway breakout and it's hugely decisive. But at the first sign of weakness in Disney, that long, it's the short side in Disney should be emphasized. In a bear market, and it's one of the worst, should only be on the short side in Disney. Take a look at the directionality of your trades and have a bias in that kind of case. Now, this is where it gets interesting. When you have a small range day after a 2 or 3 day sell-off, that gives you all the conditions you need to start seeing a lot of favorable trades on the auto framer with a lot of dojis. There was strength in Merck today. It was up 1.25%. Alcoa and Apple were weak today. Tesla weak today. Lots of 5DDs. If those fail, They are great short side trades, particularly if the market's down tomorrow. So here's a scenario. If SPY is down and a 5DD symbol is failing, then short the 5DDs that fail tomorrow. That's if the market is down and if the failure is worse than the S&P, that is a short target all day. What are those? Goldman, Intel, Cisco, Apple, Walmart. We saw this weekend the weakness in Walmart, and it was down another 0.5% today. ETFs, probably even more of them on the auto framer, so lots to choose from. Interestingly, no 5DDs, lots of dojis today. There was strength in treasuries, weakness in oil, and clean energy. Clean energy was down 1.2, and that's been one of our targets for short side weakness. That's a clear and consistent loser on the downside. What did that look like today? I didn't trade it, but I probably should have. Let me see what we got on that one. Thank you, TC2000. Plenty of moving pieces on that one today. Holy mackerel. If you did just as a point of reference, if you just are taking the OR3 rule set, here's the OR3, you'd have been long on this one to here. You wouldn't lose money on that long. And then if you played the PSAR flip and were short here with a risk box to the top of the dragon, you end up seeing a 2R move before it has any kind of adverse move. There's the next PSAR flip, 1, 2, 3. Here's the next PSAR flip, 1, 2. See my point? The movers move. Lots of auto framers to contend with. These are the candidates in priority that if they start failing, you want to be short those. The market is poised for a big sell-off tomorrow. Intel is especially weak. Tesla, weak. Critical state and good trading tomorrow. Snipers. NRG remains a raging Godzilla sniper target. 4 quiet Godzillas in the tactical symbol set: ARK Innovation, Bitcoin, Agriculture, and the VIX. We have not seen panic selling, which would feature a large upward move in the VIX. That's why I know we're poised on the edge of a knife blade right now. So NRG is still the second most volatile over the last 5 days in the S&P and was still in the green today. There were only a handful of symbols that had one-day volatilities larger than 2 sigma. That's how quiet it actually was today. We saw that in the S&P and also in most of the components. Standard indicators for this tactical set being dominated by the fall and the summer. Very few things still in the winter. So this little sell-off has not been one of panic. Not yet. We're on the border of it, though. Starting to see some breakdowns. Only Procter and Merck showing anything like strength. All right, that's everything for today. Yeah, I guess what I would just say, this little support level at 390 is holding, even though that's been like 4 days of selling, and it terminated in a doji. terminated in a doji here, and it ran all the way up to 410, and we were filled with joy and happiness. Didn't follow through, but it's right back to the support level that's held for the last 20 days. Not allowed to be surprised if it does that. Not allowed to be surprised if it does that. That's what it does after dojis. Look what it did after this doji. A nice run from 370 to 400. That's a 10% move. So it's big moves are being baked into the cake right from here. What's it going to do? Don't know. All right, that's everything for today. We'll let you get back to studying. Take good care, and we'll see you tomorrow.